Hello and very warm welcome to Victory IAS. As you know that we are covering current affairs related to last 2-3 years, important for prelims 2026. So current affairs related to economy subject here that we will be discussing. Sri Lanka state-owned enterprises reform policy. Now one thing we need to understand here, that as the heading shows, that it is related to state-owned enterprises, right? So state-owned enterprises in India, we are having public sector undertakings or public sector enterprises, right? Public sector undertakings are established through act of the parliament, and it is public sector enterprises. They are registered under Companies Act. They are registered under Companies Act. So these are two different kind of bodies that is there in India. Now public sector enterprises are also can be categorized with respect to central and state. Central public sector enterprises and state public sector enterprises, right? Like in Maharashtra we have Mahagenco, right, for electricity generation. Mahagenco, state owned enterprises, that is Maharashtra. And central PSUs are also there. For example, this railways, Indian Railways is also a PSU, right, established through an act. LIC is also or PSUs, like this. So in India, we are also having state-owned enterprises in the form of PSUs or public sector enterprises. Sri Lanka has recently given the green light to the reorganization of its state-owned enterprises. Now, reorganization here basically mean reforms. Basically here it means reforms, like we did reforms in 1991, known as what? Public sector reforms. Public sector reforms. And one part of this public sector reforms, or one subset, you can say, one subset of these public sector reforms is known as what? Privatization. Is known as privatization. This is one part of this public sector reform known as privatization, with the goal of enhancing government finances and expediting the country's economic revival. The International Monetary Fund, here, IMF, the International Monetary Fund, IMF, extended a significant bailout facility of nearly 3 billion US dollar to assist Sri Lanka in stabilizing the economy following a severe economic crisis. I hope you understand bailout packages, right? When the country is in crisis, when the firm is in crisis, then you are extending some relief package in the form of monetary assistance known as bailout packages. Now it is not for free, it is not a grant, it is a loan that you have to pay back. Transforming state enterprises, alleviating the burden. Now what basically they are doing, they are going for disinvestment, they are going for divestment. Divestment is also known as what? Disinvestment. Disinvestment means you are reducing your shareholding, in state-owned enterprises, that is government is reducing their share in the government enterprises, right? They are divesting it, disinvesting. They are sharing the share, they are selling the share of state-owned enterprises. For example, you might have seen the budget of 21-22 or 2021, where the government targeted 20,000 crore rupees from disinvestment, but it could not materialize. That is the different story. So transforming state enterprises, alleviating the burden. The primary goal of this restructuring policy is to transform state enterprises, making them market oriented, right? Not giving benefits because they are state owned enterprises, so not keeping prices deliberately low, etc. Market oriented, that means it will be governed by the forces of demand and supply, and relieving the burden on the country's budget by streamlining operations and improving efficiency. These enterprises can become self-sustaining and contribute positively to the economy. Divesting burden enterprises, the role of SRU. A separate unit will be created, and that unit will help in, for example, in India, earlier we had this Disinvestment Commission in 1997, established in 1997, Disinvestment Commission. Now, Disinvestment Commission has been replaced by DIPAM, right? Department of Public Asset Management, etc. Like that. DIPAM is a new establishment there, right? Which helps in in India, it is DIPAM. SRU, that is divesting burden enterprises. The role of SRU, the restructuring policy includes the establishment of state-owned enterprises restructuring unit, that is SRU. This unit is responsible for divesting businesses that have been a burden on the economy. By identifying and addressing these struggling enterprises, Sri Lanka aimed to create a leaner and more financially sustainable business environment. Now, when we talk about IMF bailout package and reforms, several state enterprises in Sri Lanka, including the national carrier Sri Lankan Airlines. For example, earlier we had Air India. Thankfully, it got disinvested, or finally it got privatized. Now it is owned by Tata Group. Why I am saying thankfully, because it was also putting a lot of burden on government of India. Insurance and power utility enterprises require reform under the IMF bailout package, right? When IMF is assisting, it also suggesting reforms, but majorly we understand that the reforms suggested by IMF are macroeconomic reforms and not the micro one. IMF financial assistance, nearly 3 billion US dollars, is intended to provide stability and support during these challenging times. Reforms in these sectors are crucial for long-time sustainability and growth. When we talk about long-time stability, also we can say it as macroeconomic stability, and there are four dimensions to it. When we talk about macroeconomic stability or long-term stability, there are four dimensions. One we have already seen, current account deficit. So current account deficit should be in control, low current account deficit. Fiscal deficit should be low and it should be in control. Then we have also seen this inflation should also be in control, low inflation should be there. And the last one is growth, right? So growth should also be in control. That is what is meant by long-term stability and growth. Completion of debt restructuring. Debt restructuring means what? See, when a borrower has taken some loan and now they are not able to repay it, now there is one option available that you can go for restructuring the debt. How you can restructure the debt? You can restructure the debt by making rules more flexible, by giving more time to repay the loan, right? More time can be given, less this interest rate can be charged, right? So that it become easier for the borrower or the defaulted person to pay back, right? That is the restructuring or debt restructuring. The IMF is currently estimating that Sri Lanka's debt restructuring process will be completed by September. This timeline highlights the urgency and importance of implementing the necessary reforms to address the economic crisis. The completion of the debt restructuring process is a significant milestone toward restoring financial stability in the country. Now, revenue-based fiscal consolidation. What do we mean by fiscal consolidation? Since here it is revenue-based, that means government is trying to increase their revenue. How they can increase their revenue? Maybe by increasing the tax base, maybe by charging utility fees, etc., maybe making PSUs more profitable. Those kind of things are there. Revenue based fiscal consolidation. So fiscal consolidation means minimizing fiscal deficit, spending more responsibly. That is fiscal consolidation. A key pillar of the IMF extended fund facility for Sri Lanka is revenue based fiscal consolidation. This approach emphasizing generating revenue and strengthening fiscal management to ensure the state's ability to support essential expenditure. That means it is revenue based. Otherwise, you can also talk about expenditure based, where you are not focusing more on borrowings, rather you are generating revenue. By implementing sound fiscal policy, Sri Lanka can enhance its financial resilience and effectively manage its debt. Now, triggering the economic crisis. Forex. Why Sri Lanka faced this economic crisis, that we need to understand. Forex shortages were the root cause of the economic crisis in Sri Lanka, leading to public protest and a debt default in April 22. Now, when we talk about this leading to this forex shortage, similar condition India witnessed in 1991 economic crisis. When we talk about, we had the forex reserve of 1 billion US dollar, and we were having short term foreign loans which were maturing in in the range of 1.45 billion. So the short-term loans we had 1.45 billion, and total forex we had 1 billion only, and we had only 15 days or 2 weeks of import cover. Import cover, that means we are having heavier dependence on crude oil, etc., petroleum based products. We don't have lots of reserves, so we are dependent on foreign countries to provide crude oil. So they are providing us crude oil, we are dependent on those imports, right? So we had only 15 days of import cover. That means we could have imported only 15 days of those imports that are mandatory for us. That was the condition in India in 1991. Similar condition you can see here. The country faced significant challenge in managing foreign debt. Foreign debt because you cannot print foreign currency, right? So you have to give it from your foreign exchange reserve only, and that was the condition of foreign forex shortage, which had a severe impact on its economy. Recognizing the need for swift action, Sri Lanka engaged in a negotiation with the IMF to address these critical issues. I hope you are able to understand it. Now let's talk about financial inclusion in rural area. Why financial inclusion in rural area or rural India is important? Because once we have understood that for growth and development, what do we need? What do we need for growth and development? So we need financial inclusion. When we say we need financial inclusion, that means we want to have people who are having bank accounts. Not only bank account, financial inclusion is not only about having a bank account, it is also about having credit facility available, it is also about insurance facility being available, right? These things, banking services, other banking services are available, banking cost is low, so that people feel attracted towards the kind of banking services that are there at their disposal. So let's understand financial inclusion in rural India. According to new study, access to financial services such as bank accounts can help Indian rural households cope better with challenges such as poverty, inequality, and climate risk. Climate risk means the kind of challenges that the climate change is posing on the rural population, right? Need for financial inclusion in rural area. What is the need? So need to understand financial inclusion, as the question have been asked in mains exam also many a times. So a key driver for economic growth, poverty alleviation, and prosperity, that can be possible from, or that can made possible from financial inclusion. Because when financial inclusion will be there, economic growth is can be there, economic growth can enhance. Why? Because when financial inclusion is there, people are having access to bank accounts, having access to banking services, they may have the potential to access loan, to start a business, to invest, and then to have a prosperity. So economic growth, poverty alleviation can be there. When people have more economic opportunities, then maybe poverty alleviation is possible, and prosperity, raising standard of living, is also possible. Access to formal finances can boost job creation, reduce vulnerability to economic and climate shocks, and increase investment in human capital. When we say human capital, it is about investing in education, it is about investing in healthcare, etc., skill development, healthcare, education. These are the things. At a macro level, it can support sustainable and inclusive socio-economic growth for all. That is, inclusive growth and development can be there. Now, financial institutions for inclusion. What are the institutions which can help in achieving financial inclusion? That we can see. Scheduled commercial banks, as you can see here, scheduled commercial bank, regional rural banks, payment banks like Paytm, etc., Paytm, Airtel payment banks, microfinance institution, business correspondents like Bank Mitra, earlier Bank Ombudsman policy was also there. Is a small finance bank like AU Finance Bank. These are the institutions which can help in availing or achieving financial inclusion. Now, highlights of this particular study is 59% of the survey's household experience climate shocks in at least one of the 5 previous years. So when we talk about climate shocks, that means, for example, erratic rainfall, right? Erratic rainfall, for example, a monsoon has happened in the span of 5 months or 4 months, but now it is happening in the span of 15 days only, causing urban flooding and many other things that you can understand, right? Saving to crop damages, also agriculture also gets affected by it, so using their own savings to cope with the issues. A rural household have limited access to liquidity, they take high interest loans from informal sources like money lenders in the the village or in rural areas. Household rely on financial assistance from kin and relatives. So this is the first place where they will go, kin and relatives, followed by friends, village communities, money lenders, and lastly banks, because maybe accessibility is not there. If accessibility is there, availability is not there. If availability is there, affordability is not there. So these are the conditions because of which the formal loans are not very popular. Factors affecting access to financial services. So for example, number one is location. If you don't have bank branches, if you don't have access to banks, availability of banks, that is one issue. So location, most commercial banks set up their branches in profitable urban commercial area and not in rural areas, right? That is why you will see RBI came up with many policies like this priority sector lending, so that many a significant amount of the loan, a total loan, should go to the significant portion of the total loan, 40% for commercial bank should scheduled commercial bank should go to priority sector. And in priority sector, for example, education, for example, this agriculture also, right? Small and marginal farmer was also included there. So that is the thing. Lack of infrastructure in rural and semi-urban areas, lack of access to a formal banking outlet, proper internet connectivity is not there, electricity is not there. Many a times you will see in rural areas, if you are fortunate enough, then you will be able to locate one ATM. But when ATM is there, server is not there because internet connectivity is not available. So those kind of challenges are there, are major roadblocks to both consumers and financial institution. That is why we are saying that when digi banking etc. is being emphasized upon a lot, so we should focus on creating infrastructure first, right? If infrastructure is available, maybe the fruits of development and technology may also reach to the remote areas and rural households. Rising unemployment and low wages, financial condition for people plays a pivotal role in accessing available financial services. Service charge, for example, if high service charge is there, that will also discourage people, but also create a lack of trust among people using banking and financial services. Now, what kind of efforts government has put for financial inclusion, as you can see here? The Pradhan Mantri Jan Dhan Yojana direct benefit transfer. The Pradhan Mantri Jan Dhan Yojana, that is having access to bank account. Every individual should have bank account. But we have seen the challenge here is many a times that those accounts which have been opened under this Pradhan Mantri Jan Dhan Yojana, they are dormant, right? A significant amount of those bank accounts are dormant, means people are not transacting in those accounts. That we need to understand, and how we will cope up with that is the challenge here. Direct benefit transfer, for example, this Manrega etc., whatever government scheme benefits are there. So when government is trying to transfer some amount, they will be transferring in the bank account of those beneficiaries by linking their Aadhaar card with their bank account. Aadhaar enabled payment system also we have discussed in the initial discussion. Bharat interface for money, that is Bhim UPI. Now the key challenge that is there here, while 80% of the Indian population may have bank accounts, almost 45% of such accounts still remain inactive due to a combination of many things, right? Maybe you can understand the bank reach is not there, maybe the people are not having enough money, or maybe they are not financial literate, right? So that they are not able to put their money in the bank account. Now if we talk about best practices here, companies such as Okrangi Limited, BTI Payments, Fino, etc. have provided many banking and ATM services through a technology-driven platform. For example, you might have heard about white-labeled ATM. What is white-labeled ATM? They are not belonging to one particular bank, right? Basically, they are being provided by certain firms, right? For example, Tata was also involved in providing white-labeled ATM for more financial inclusion. They have managed to boost rural entrepreneurship and increase the level of financial literacy. Rural entrepreneurship by providing credit facility. The PM Mudra Yojana provides collateral free loans up to rupees 1 million, that is 10 lakh rupees for small and micro enterprises. Now financial inclusion will reduce the resource that households need to keep in liquid form and therefore make them available for productive investment to address climate risk. Now when we talk about climate adaptation, it requires putting resources in the hands of people because they are best placed to understand climate impact, right? People are when you are impacted by climate change, you are there to understand what kind of risk that is there, right? Now ECL based loan loss provisioning norms. Now what do we mean by loan loss provisioning? Let's first understand this and then go into the details of it. When we talk about loan loss provisioning, what, for example, this is bank. Now bank are receiving money from depositors. Bank are receiving money from depositors. Depositors are putting their money in bank, right? And bank is lending this money to borrower. Bank is lending this money to borrower. So suppose bank has received 1 lakh rupees as deposit. 1 lakh rupees as deposit, and bank has given this money to borrower. What bank will receive? Bank will receive this 1 lakh rupees, as well as suppose they have given it at interest of 10%. So they will receive 10,000 also. Now this 1 lakh rupees belongs to depositors. So this 1 lakh rupees that the bank has received, it is not the bank's money, rather it is a liability on bank. Whenever whenever depositors will demand, they have to pay back, right? Now the deposits are also having two types: time deposit and demand deposit. We are not going into the details of it. Suppose just now let's understand it like this: whenever they will demand, the banks have to pay back. Now they have extended this loan to a borrower. Now borrower has not paid 1 lakh rupees. Forget about this 10,000. If he is not paying principal, how come he will pay interest? So he is not paying anything. Now this 10,000 rupees, we can understand that it was the profit of bank. So bank has not received it, it is fine. But 1 lakh rupees, this money was not of bank, this money was of depositor. Now depositor wants their money back. So banks have to provision this money. If bank is not able to receive their loan back, then bank have to provision for it, right? Provisioning means keeping money aside, right? Provisioning this money by maybe from their profit, from their profit from other businesses, or maybe from their assets, etc. That is the thing here, right? So I hope you can understand the provisioning, right? Provisioning norms. Now let's understand what kind of development is there. So lenders have sought, that is banks have sought a 1 year extension from the Reserve Bank of India for implementation of the expected credit loss based loan loss provisioning framework. Means if that is expected loss is there, then you have to provision for that amount. That is the thing. Loan loss provisioning refers to the practice of setting aside funds by banks to cover potential losses arising from loans that may default or become unrecoverable. Now what is current system? Current system is that we recognize the loan very late. When we have stopped receiving the amount, then we recognize it that now it is performing bad. So banks are required to make loan loss provision based on incurred loss approach. That is, the loan loss provisioning happens much later, leading to an increase in credit risk for the bank, right? Loan loss provisioning happens at later stage. What do we mean by incurred loss model? That this law assumes that all loans that we have given will come back, right? Rapid until evidence to the contrary is identified. Only at that point it is defaulted loan written down on lower value. This leads to delay in recognition of defaults, right? So now what is the new proposal? New proposal is expected loss based approach for provisioning by bank in case of loan defaults, right? How banks are required to estimate the expected credit loss based on forward looking estimations. Means estimation will be done on various stage 1, stage 2 and stage 3, as you can see here. Banks classify financial assets including irrevocable loan commitments and investments classified as held to maturity available for sale into 3 categories: stage 1, stage 2, stage 3. ECL norms, when we talk about stage 1, financial assets that have not had significant increase in credit risk or with low credit risk at the reporting rate. So when reporting rate is there, the credit risk has not increased much. We don't have any any proper evidence also for that matter. Even when we talk about stage 2, instruments that have had a significant increase in credit risk. Credit risk has increased, maybe the business is not performing or something, but we don't have any evidence. So but don't have objective evidence of impairment. Here you can see we have evidence also, impairment at the reporting date, right? So this is about the development that we have seen. Now we will take another updates in the next video. So keep this be there on the platform of Victory IAS and be there to receive more information on current updates. We will see in the next videos, right? So thank you very much. Take care. Bye bye.